Hi, this is Chuck Hughes. In today's video, I'd like to talk about the married put strategy, which is one of my favorite strategies for trading in volatile markets. This is a very low risk strategy, as we will discover shortly, and it's pretty simple to implement. You purchase a stock or an ETF, and you purchase a put option to protect your stock position. And right now I'm displaying a brokerage confirmation that shows one of my married put trades, and in this particular trade I bought the Nasdaq QQQ ETF at 54.35, and I also bought the Nasdaq January 55 strike put option. So let's look at the math for this particular spread trade I took. I bought the Nasdaq ETF at 54.35, and I also bought the Nasdaq January 55 strike put option at 4.11. So if we add the cost of the put option to the cost of the ETF, we come up with a total cost for this spread of 58.46. Now, once you purchase the 55 put option, the value of your ETF cannot go below 55. So if we have a total cost of 58.46 minus the minimum value of the put option of 55, we come up with a maximum risk on this trade of 3.46 or $346. And that translates to a maximum risk of 5.9%. So you can see this is a very low risk trade, and this is that's why it's one of my favorite trades during volatile markets. Once you establish a married put trade, there are several options as far as managing the trade. One option would be to sell a call option against the QQQ ETF at a later date if it increases in price. By selling a call option, depending on the premium, you can lock in a guaranteed profit on the married put trade. Another option would be to sell weekly call options against the QQQ ETF. And right now the weekly call options on the QQQ have about 1.9% time premium on a weekly basis. So that 1.9% at option expiration each week becomes profit regardless of whether the QQQ goes up or down. So there's 21 weeks until the expiration of the 55 strike put, so we could sell weekly call options for 21 weeks, and this has the potential to generate a 40% return just from the time value alone from the weekly call options. And another option would be not to sell a call option at all and to just simply hold the QQQ ETF. And if we did that, the upside return is not limited if we don't sell a call option. So there's several ways to manage the married put spread once it's established. In addition to the Nasdaq ETF, my brokerage confirmations shown here show that I initiated married puts on other stocks and ETFs such as Apple, Baidu, the small cap ETF, and the emerging markets ETF. So let's recap the advantages of the married put option spreads. Number one, your risk is limited, and when you purchase a put option, the value of the underlying stock or ETF will not go below the strike price of the put option, so your risk is strictly limited. You can sell a call option against your position if it increases in price, and depending on the premium of the call option, this can guarantee a profit for the trade. There's also weekly options available on various stocks and ETFs, and you can sell weekly call options against the married put spread. And the married puts allow you to maintain your positions during volatile markets, and this is very important with the type of market we're having this year. Normally, if you just take a directional trade and you buy a stock or you buy an option, you can easily get stopped out of your position very quickly with the wide swings, price swings that we have in the markets lately. So with the married put spread, you don't have that concern. You're not worried about getting stopped out. Your risk is defined before you even enter the trade. So this is a great strategy for volatile markets. And you also have the option with married puts of not selling a call option. And if you don't sell a call option, then your upside potential on the spread is not limited. So all in all, this is a great strategy for current market conditions. I make trade recommendations for the married put strategy through my Inner Circle advisory service, and if you'd like to get updated profit results for the advisory service, just log on to chuckhughesic.com. This is Chuck Hughes. I want to thank you for listening, and I wish you the best in investing success.